Hey everybody, it's Hussein Kabani, your favorite broker, and we're back with another market update. So it's middle of April 2025, and things are okay, I would say, at best case. We are going to do a bit of a market update, but I want to address the elephant in the room right now, which is basically people are worried. People are worried about the market crashing, where everything is going, and I want to address that with you guys right now. There is no simple answer to say it's going to go this way or that way. As you guys have probably heard me talk about it already, I think that there's so many different components that when you put all of them in line and hit that equals button, it cannot spit out a formula, because where we are at right now, in my opinion, we've never been here before. So I think it's going to be very difficult to calculate what the outcome of what's going to happen over here, even if you have all of the situations in the air. What do I mean by the situations? Well, we have a federal election. We have Trump doing whatever the heck he feels like doing. We have a housing market that's already behind right now. We have stagnation or inflation, and we have a lot of inventory on the market. So all of this plus a lot of other issues all together combined, there's no equal signs that is going to give you a final formula, especially when we have a wild card like Trump. Like, he says something and the stock market loses $5 trillion, and he does something else and 4.7 of it magically appears again. It's just such a weird thing that I don't think anyone's actually seen in their lifetime. So for these reasons, I don't think we can actually say what's going to happen next. But this is where I want to go back and look at when things like this have happened before. Maybe not the exact circumstances, but we've experienced market drops before. And I'm going to refer to my little cheat sheet over here, and we'll put it up on the screen. But I just want to highlight this, okay? If we look at the last 95 years, 70 of those years have been in the positive. So like 74% of that have always been in the positive. So out of 95 years, so guys, we're going to have the up and down. And it seems like, for the most part, when it's a down, it's not down for as long as it's up. Usually it's up. So how long is this down actually going to last? Now, I'm going to give you these stats, but if we look at this, and I'm going to start with the worst one that we have right now, which is 1929 to 1932, the Great Depression. So the TSX, I believe, was set up in 1930. So this is a kind of a guesstimate as to what kind of ended up happening at that time. So basically, the TSX at that point, it's estimated, lost 80% of its value, okay, at that time frame when this Great Depression happened. This is the extreme case. It took about 15 to 20 years to actually recover all of that. Now, let's move forward from that, okay? If we look at 1973 to 1974, we had an oil embargo and inflation. Lost 45% of the stock market, and it took 5 years to recover that. In 1981 to 1982, we had really high interest rates, okay? The TSX lost about 30% of its value, took 3 years to recover that. 1987, basically programming trade, and there was a bunch of panic in the market. We lost 23% in the Toronto Stock Exchange, and it took 2 years to recover that. When we look at the dot-com burst, which basically happened between 2002, lost 43% in the Toronto Stock Exchange, recovered everything back in about 6 years, okay? Financial crisis of 2008 to 2009. The US obviously got hit worse than Canada did, but Canada did still have an impact of that. We lost at that time, believe it or not, 50% of the Toronto Stock Exchange value, lost 50% of that. You know how long it took? 3 years to recover that back, okay? In 2020 with COVID, basically the TSX lost 35% of its value, took 6 months to recover that. Yeah, I get it. It was printing money and it recovered faster, whatever, but 6 months to get back to where you were. And now if we look at 2022, where we had inflation and high interest rates, we lost 16% in the Toronto Stock Exchange, took about a year to get that money back. The point of telling you all of this is that we have the up and downs, and we have recovery from that. The worst example over here was that Great Depression. Do any of us think that's going to take 15 or 20 years to recover from this? I don't think so. I think we were in a different time of the world at that point. We didn't have the technologies, we didn't have the innovation, we didn't have the things that we have right now that help us to get through these cycles faster and faster. And that's what we've seen. We get through these cycles faster and faster. Just because the last few I told you was 6 months, a year, 18 months or something like that, I'm not saying that that's what's going to happen in this scenario right now. But is this going to last longer than 3 years? I don't know. I have a gut feeling that it's probably not going to be as bad as a Great Depression. Could be wrong. I was wrong already this year in saying that, hey, inventory is we're gonna pick up sales, but then Mr. Trump comes in and waves his wand and screws everything up. But I don't know. Do I think that based on history that it's gonna be that bad? I don't think so. We're all feeling the pinch at this point right now. But again, the point is that I think that we're gonna recover from this. Why am I telling you all of this stuff? I'm telling you all of this because I think that there's always opportunity that lies in this whole thing, okay? Like just last week, when we saw the stock market, it was crash, crash, crash. In one day, we got back $4.7 trillion. If you bought at that low period, I was not smart enough to. Chris was at the office, told me about X, Y, and Z, didn't tell me to actually invest in it. He should have, because he has this magic crystal ball, I think, sometimes. But if I had put some money into that thing, well, I would have saw a huge, massive increase in my thing. I didn't. Apparently, people are like, oh, if you're watching Trump's subliminal messages in there, you could have picked up on this and put $1,000 in and earned 1.7 million. I don't know about that. But like, there's always opportunity in this, guys. So I think that maybe we have to look for the opportunity. And why am I been telling you guys in my previous videos is that I see two clear categories that this could be something that they could take advantage of right now. And it's the first-time home buyers. I'm reiterating myself because I think it's true. As long as that first-time home buyer thinks that, hey, the market at some point is going to increase. They have a decent job. Maybe they have a job that's not going to be affected in automotive or IT or something else like that. Maybe they're a doctor in the medical business or a lawyer or something else like that, where they feel confident that they're going to continue to generate income and they're not going to get affected by this whole thing that's going on right now. Maybe it is a good time for them to say, hey, these prices have come down or they're stabilized. There's a lot of inventory. I could go out there and negotiate. And I feel like things are going to get better in 2 years or 3 years. And when things do get better, I'm going to be in a better situation. Maybe I could buy something right now that in 2, 3, 4, 5 years, I won't be able to buy and I'll be in the market already. So maybe that is an opportunity. It's not for everybody, but it is for some people. The other one, and a lot of clients that we're working with right now, I think I've said it before, we have a lot of smart clients. I think smart people gravitate to working with us, okay? And they're very smart people. So I think that that's the other category of people that are in houses that they want to upgrade. They're comfortable with their jobs. They don't feel like anything's going to happen to them. And they see the value right now. You know, they're selling their townhouse for $850,000, $900,000 and getting a beautiful detached double car garage home for $1.2 million or $1.3 million. These houses used to be $1.8 million, okay? So like they're getting an awesome opportunity to kind of upgrade over here. So there is opportunity here. This is a limited amount of opportunity, but there is other opportunities in the market, but these are the biggest markets I actually see that can take advantage of this. Now, in terms of the market update, if I look at Q1 numbers and I compare it back to last year, we are exactly like 25% down in both categories. From freehold to condo, they're both down the exact same amount. So it's not like, well, we're way down in condo sales and okay on freehold. No, they're both down 24%. It's across the board. We're exactly 4,000 units short of where we were in first quarter of last year. So it is quite a bit of a difference. The other thing that we're challenged with again right now, and I've been talking about it, is inventory. So basically I say last year, September 2024, I recorded one of the highest inventory levels that ever existed in the Toronto Regional Real Estate Board. Over 100 years of history of that was 26,080 units I recorded. But right now we're at 26,800. So 26,000, let's call it 800 units available for sale right now. So we're at the highest level of inventory that we have ever had. And we're about 60% higher than we were last year right now. Halton region, I think, is actually about 80% higher than what they had last year right now. So yeah, there's a ton of inventory out there right now. And this is the first time I'm actually going to start to say that, hey, when I look at it at a 52-week high in terms of pricing, we're starting to see some declines in pricing. Now, is that going to last? I'm not sure. But it's got to happen, right, guys? Like if our sales are down 24% and we're seeing inventory increase at 80%, you got to find that fine line at some time where it's actually going to push it down. Earlier in the quarter, like first quarter, I was saying it's kind of weird, right? That we're seeing the reverse happen of what supply and demand is. Supply and demand is when your supply is high and your price is, or your demand is low, your price is going to come down. And we didn't see that happen. So our inventory is high, our demand is down. We could see it in the stats, and we weren't seeing the price getting affected because I think our market is resilient when it comes down to those things. But now we're seeing that downward pressure. I'm not saying it's huge right now. It's very recoverable if we start to see some sales pick up over here. But are we starting to see a little bit of a downward pressure on price? Yeah, 100%. We're seeing that downward pressure. Where is it going to go? Again, very hard to tell. I think that one of the big factors that is affecting this right now is this. There's a couple. So let me start with one of them right now, which is I don't think that's the biggest one. And I think the weather is one of those things that does affect our economy. People just don't feel good, right? It's overcast every day. If you're not, pumping yourself up with vitamin D, you're probably not feeling so great right now. And all the bad news that's coming out and letting it get to your head, you're probably not feeling that vibe. And that's killing our market at the same time, because people are just not there buying into all of this stuff. And some of it's legit, and just the weather is not that great. So it affects us psychologically. So I think that's part of it, maybe a small part, but we're starting to come out of that. At least this week, we're going to start to see seasonal temperatures. I don't want to be a weatherman, but it's getting better, okay, hopefully. So that's one of the parts. The other part is definitely Trump in the US and what they're trying to do. I kind of say it like this, like, Trump, I think that if he wants to do whatever he wants to do and the American people want to do whatever they do, it's on them and it's free world. Do whatever you want to do. I just actually hate the approach of it all, is basically coming out and sucker punching somebody in the face and talking a bunch of crap about saying we've been, deprived and you guys ripped us off. The whole world ripped us off. I don't like that. I feel like there should have been some kind of diplomacy, but that's just my personal opinion about the situation. But the thing is that whatever he's doing over there is obviously causing, a ripple effect in the world, global economy, especially in Canada at the same time, since Canada is a large trading partner with the US. So it is obviously causing some cause for concern over here at the same time. But the thing is that you can only go so far with that fear. So when you get punched in the face at first, I've been punched once in the face and it hurts. Hopefully you haven't been, but it stings a lot when you get hit first. But after maybe 30 minutes, an hour, it starts to wear off. A week later, you don't even realize, unless you're walking around with a black eye. I wasn't, luckily, but it starts to affect you less. So I think now this has been going on for a while. So you start to get affected less and less and less by the whole thing. It's still happening. It's still a concern. Don't get me wrong. You could, golf with the wrong person the other day and do something different today. I don't know, but that could be something that could happen there. It's still a concern, but I think it's slowly starting to fade away in our mind. And I think the biggest thing that we're seeing right now in our market is that our own federal government right now. And I think that, and I heard this from my real estate coach, because we had a candid conversation about it, and I think he's right to a certain point. I think that this election is going to kind of say where our housing market is going to go, because both of these candidates have a very different agenda, in my opinion, of where they're going to try to go and how they're going to go about things. So I could be wrong, but I think that if the Conservatives win, I think that we might have calm after that. People are going to be upset, happy, upset, whatever else, but I think generally we're going to have kind of calm. I think liberal people might say, okay, we've had it for 9-10 years or whatever, and maybe, things haven't gone so well, or, it's a chance for somebody else to come in. We've kind of seen this cycle happen in our federal election, in federal politics in Canada. It kind of changes back and forth. So I don't think it's going to be unusual. I think that people will kind of stay calm at that point. Now, if the Liberal Party comes in, which all the polling is saying, if you agree with the polls, like that seems like that's kind of the way it's going to go. If they come in, then hopefully there's going to be calm. And if that happens, then I think that we still will be in good shape. And if that happens, everybody stays calm after the federal election, I think we'll probably still see 60, 70, 80,000 sales happen and throughout the GTA. And I think we'll be okay at that point in terms of the housing market. Now, the caveat to all of this is that if the Liberal Party is elected into official government at this point right now, I'm not sure, but I feel like there might be some uproar from people and some people that are not so settled about what's happened. And if that starts to cause an issue in a big way, like let's think about like trucker convoy and things like that. If people start to become very upset about the situation and we have some unrest around it, it's going to add to more uncertainty in the market overall. And I think that's where we could probably hold the housing market back. So if that happens, then I still think that we'll see the inventory climb. We might start to see more depreciation in our real estate market. And I think that we'll definitely see a lot lower sales. At that point, if we hit 50,000 sales, I think we'll be lucky. Last year, I think it was around 68,000, and that was a low number compared to the previous years. If we hit 50,000, if there's a little bit of if there's unrest after the federal election is done, if there's unrest and we hit 50,000, I still think that's going to be a lucky number, but it's going to be overall bad for the real estate market overall, because I still think that we will probably see a price depreciation happen a little bit more aggressively than it may have happened if it was going to happen anyway. So I think that's kind of a bit of the concern with what's going to happen with the market. Again, it's something that we can't tell of what's going to happen over here at this point right now, but that's some of the ways to kind of look at the market. How would I move forward in this market right now is I would be obviously very cautious. Am I looking at it right now and saying this is a great time to start buying condos and investing in pre-construction and this and that? I know I have a relationship with a lot of these pre-construction condo builders. They're probably not going to like what I have to say about it, but I think the truth is the truth. I think I would be a little bit hesitant right now to kind of invest in these things unless I think that there's going to be a stellar deal in this. So I would kind of stay away. I would stay away from all these gimmicks, monthly payments to help you get to your deposit. I would stay away from all of these rent guarantee things. I think it's all BS when it comes down to it, because if they could sell the unit, if there was value, I think people would recognize it and they would line up to buy these units. But I think that there's a lot of this marketing that's going on to try to create something false out of something that's not actually there, to try to get you. And if they get you, then remember that you were the target at the end of the day. And it's unfortunate because I just met with somebody yesterday. They bought into this Icon project in Pickering on Dursan, and they told me they paid $860,000 for this, and they want to, you know, make a 15 to 20% gain on it. Real story. And I basically calculated in front of them. So I was like, wow, for this stacked townhouse, 2 bedrooms, 2.5 bathrooms, you want to get $1 million, almost $1 million for it? And they're like, yeah, it seems like, you know, we should be able to get that much. That's how much the market should move up. I don't agree with that, but I basically told them that I think it's worth around $700,000 if you're very lucky, and they paid $860 for it. They got caught up in the hype and they bought it 3 years ago. If I was that guy, if they called me, I would have told them don't buy it, because it just doesn't make sense to me at that point. But I would say be very cautious. There are opportunities out there, but you have to be very cautious about what you're going to do in terms of moving forward. I think that if you are going to be in the market of upgrading your house, do it in a smart way. I think it's a good idea. If somebody's out there, like I said, a first-time buyer, I think it's a good idea. If you're going to be downsizing, I still think it's a good idea. I might be in that category too, right? Like, but you're going to do it in a strategic way where you could try to get the maximum for your property, of course, but then maximize what you're going to be able to do with that as well and be able to hit your goals. So a lot of cool opportunities still in the marketplace. Again, I say this all the time, and it's not just for me to get on a phone call with you and salesman you. If you guys know me, that's not my style, but it's very individual. Real estate decision is a big decision, and it's very individual to that person and their unique circumstances. So for that reason, we always have a link in all of our videos and everything else like that, basically saying that, hey, contact me. I'll be happy to 15, 20 minutes, get on the phone with you. I don't need to come to your house and hustle you with paperwork. Get on the phone with me. I will give you what my honest opinion is about what your scenario is, and I won't call you and harass you and sign something with you. If you want to do business, I'm here to help you guys out and to help facilitate a transaction. That's all I'm trying to do over here. I really hope that you guys found this video to be valuable. Please go ahead and hit the like button. Helps my algorithm. I don't know much about it. Chris does, but he says it helps. So if you can help us, like it, share it with your friends, subscribe, because I think we have real good content and honest content that I think that's going to help you guys make a better decision for whatever you guys are trying to do. Until next time, guys, remember one thing: get Cabani, get sold.
Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold.